Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja coming live to you from Mumbai, and with me, Shail Bhatnagar, our markets editor. Well, equities staged a smart recovery on Tuesday amid positive global cues. But the question is that will the momentum sustain going forward? Well, we'll discuss this and lots more. But first up, the top headlines for you. Sentiment turns for the better on Dalal Street as the initial shock of terror attack on Israel fades. Investors use the drawdown on the Nifty to purchase quality blue chips at lower prices. Overseas cues improve sharply. Crude oil is flat. Meanwhile, PSU stocks are likely to remain on top of traders' list on Wednesday after a strong show on many counters such as GMDC and ITI Limited. Quarterly earnings season kicks in from today with software giant TCS set to report financials. Very good morning, Shell. It's a Wednesday morning, and markets rebounded sharply amid positive global cues and, of course, moderation in crude oil prices. The majority of sectors, participated in the move yesterday, like realty, metals, and financials. Nifty, in fact, also crossed the hurdle of short-term moving average, and we have TCS results today as well. So, where do you see Nifty, and what should be the strategy?
Good morning, Tanya, and good morning to all the wonderful viewers who are joining us from different parts of India as also across the world. It's a bright, shiny Wednesday morning, and Tanya, I need you to do one thing. Just tighten your seatbelt on the chair that you are sitting and get ready for an all-time high, probably in October for Nifty. And I'll tell you why this is happening. See, the trend is now on the upside as far as Nifty is concerned, and the sentiment has crucially improved for the better given the cues that we are seeing from overseas markets. Remember, there was nothing wrong in our markets. It's just that there was a mild hiccup in the month of September because of rising US 10-year yields, rising dollar index, and of course the jump in crude oil prices. And then followed by this a devastating terrorist attack in Hamas. And it is during this phase of bad news, Tanya, that the Nifty has formed a bottom yesterday. In fact, it's risen very sharply, up about 177 points, 19,689. If you've been with us for the last 2 or 3 trading sessions, we've constantly advised you to look at 19,500 call. Yesterday's session was devoted to 19,600 call, and both those calls have burned wonderfully. So, Tanya, 2 or 3 things. One, this low has been formed when the market was going through a bad phase, and this negative news and the recent low has resulted in a base formation on the Nifty. And now it's the sloping 20-day exponential moving average which will support the index on its way up. We've also arranged for a 15-minute 2-day intraday chart for the Nifty, where you will see that the index closed at its day's high yesterday. And yes, this is the one. And you'll see a lot of pent-up buying now coming in for 2 reasons. One, it's the weekly expiry of the Bank Nifty today, and we are on T-1 on Nifty. So both Nifty and Bank Nifty should bounce back from crucial support levels that we've seen now being fairly well validated. Apart from that, get ready for a fresh high on Nifty as far as the month of October is concerned. Crude oil, gold futures, all of them are now flat, and the initial fear that the market seemed to have has now abated. So good news for bulls. This weekly expiry on the Bank Nifty as well as Nifty will help the index, and it's the cash stocks that will continue to attract traders, especially PSU rally has restarted in counters like GMDC, counters like ITI, which you so well put. If you look at the options chart, well, it shows a very, very strong bout of short covering that was done by the bears yesterday in fears that the index might rise sharply further. So that's what's happened on the Nifty. And a fresh support has now emerged on 19,600 for the bulls, and 19,800, Tanya, is now on the radar.
Okay, absolutely. 19,800, that is the level on the cards. But as you rightly pointed out, Shell, we have, Bank Nifty's weekly expiry today and strong short covering is expected. So, what are you looking on Nifty Bank today and what are the fresh support and resistance levels?
So, Tanya, as you know, one of the worst performing indices over the last one odd month has been the Bank Nifty, which is there in front of you in the form of a daily chart. We had seen the Bank Nifty open below its 100-day exponential moving average on Monday. And the reason was that this problematic situation in the Middle East and gathering war clouds, both globally as over the Indian economy, had spooked bulls on Bank Nifty. Now, today is the weekly expiry, it being Wednesday, and at least I expect a strong bout of short covering to continue on the Nifty Bank. It had taken root very, very smartly and very, very deeply as far as Tuesday's trade was concerned, and the index ended about 500 points higher, 44,360. And the good point, Tanya, is that you see a lot of positivity that is coming in the monthly options chains of index heavyweights such as HDFC Bank. I just want to make a small point. If you look at the 1 month chart of HDFC Bank, it's the worst performing stock in Bank Nifty, and it is also the heaviest weighted. So, if there's positivity coming in that particular stock, that will reflect very strongly on the Bank Nifty because a swing trade is in the making. So, down 5.8% HDFC Bank on a 1 1 basis is now going to probably help the Bank Nifty on its way up. And given the strong trend that you see in the Nifty, it's possible that you'll see the Bank Nifty closing above its 100-day moving average fairly substantially. And that's the trigger for bulls to step up purchases, Tanya.
Okay, absolutely. That's the verdict coming in on Nifty Bank. But as always, Shell, let's discuss FNO space as well. Lots happening there as well. So what are you looking at in the FNO space today?
Tanya, I would, given the backdrop of a very, very strong weekly expiry slated on Bank Nifty, I would focus my attention on banks. I would imagine you'll see a fairly, fairly strong traction remaining steady on HDFC Bank and ICICI Bank. Remember, it was the general lack of sentiment on the long side that had prevented bulls from taking substantial positions. Yesterday's Bank Nifty advanced decline ratio was 12 is to 1. I'm sorry, 11 is to 1. The only loan stock that did not perform was IndusInd Bank, but that too rose fairly sharply from a low of 1412 to 1424 as its closing price. But all these stocks, the heavyweights, HDFC Bank and ICICI Bank, the high beta Federal Bank and PNB as also Bandhan Bank, they rose very sharply. I think today is going to be a banking day, and these are the few stocks that I would look at in the high beta space, which is Federal, consolidating near record highs, PNB, very anxious to reclaim its 80 rupee level, and of course, HDFC Bank and ICICI Bank. Given the momentum that we've seen yesterday, these are the 4 or 5 stocks that would outperform. Of course, you have the whole pack in auto. Escorts, if you remember, we had discussed with the technical guest yesterday. It closed at a record high, somewhere like 3,407. Very, very strong bullish charts emanating from there. So these are the couple of stocks that I'm looking at in the high beta, low ticket size space, as also in the high beta, slightly expensive space, which is escorts. And I would be not doing my duty if I don't mention the fertilizer space. A lot of traction coming in on the long side. Some of the favorites have been Chambal Fertilizers and, of course, Coromandel International. Tanya.
Okay, absolutely. Keep an eye on these stocks, and looks like it's going to be a banking day today. But let's talk about global stocks as well, Shell. I mean, they rose on Tuesday after Federal Reserve officials signaled the recent yield surge could justify caution on interest rates. And Dow added 0.4%, S&P 500 0.5%, and Nasdaq also jumped around 0.5%. And the yield on the benchmark 10-year Treasury yield fell nearly 13 basis points to about 4.65%. Oil prices, they also fell more than $1 per barrel on Tuesday. In fact, gold prices, they also slipped after rising nearly 2% in the previous session. So, what is now essential, Shell, to track from overseas cues?
Tanya, I would frankly just look at two things. One
Hmm.
is crude oil prices, and of course, gold. I'll give you a reason. See, uh, it's evident that Israel is looking at a ground invasion of Gaza. They are sort of, you know, preparing the ground, so to say. And there are all sorts of global noises coming in support of the terrorist organization Hamas. Now, if this war deepens as it will, and you see, different nations trying to prop up different regimes, then the first casualty will be a risk trade in equities, and that will come from crude oil prices. Uh, that's the only thing to watch, and a complete, how should I say, inverse relation will be gold. So rising gold and rising crude oil prices are the two things that I would watch, as also how Middle East countries react to what Israel does. It's been a very, very painful weekend, and details are emerging. And it's unlikely that Israel will hold back, and the entire Western world is backing that country, as also parts of the Middle East, which are backing the terrorist organization Hamas. So, be that as it may, I think crude oil is the only instrument that you should watch, and also watch gold because safe haven buying will emerge there. Tanya.
Okay, absolutely. Got that. And we are waiting for Gaurang Shah. He'll join us shortly and we'll discuss markets with him also. But meanwhile, Shell, I know you talked about banking space, but any other space that one should watch out for, especially in today's trading session?
Uh, Tanya, it's the weekly expiry of the Bank Nifty. I would imagine, given the pain that we've seen, it's always good to remain glued to where the action is. The PSU basket is doing very well. I would imagine all those stocks that have been forgotten, BHEL, maybe stocks like. Just let me give you a good list now that you are at it. Let me just share some very good numbers that I have. 1 second, please. There seems to be a network issue here. One moment. Yes, that's how it is. But I would imagine the entire defense pack, which is Mazgaon, Cochin Shipyards, and Garden Reach. Importantly, Hindustan Aeronautics. These are the counters that will come back fairly sharply because they've seen a decent correction. And we saw seeds of strength coming in early morning trades as far as Mazgaon dock was concerned yesterday. So this pack has also railways. It's the same set of high beta, low ticket items that we often talk about. Those are coming back in action, and we will also see the PSU banking stocks coming back into the long side, PNB specifically, as also probably Canara Bank. So these are some of the sectors that I'm watching at.
Okay, absolutely. These are the sectors one should keep an eye out on. And now we also have with us Mr. Gaurang Shah, our market guest. He's the senior VP at GeoJet Financial. Very good morning, Mr. Shah. Always good to have you on our show. And
Thank you.
we were talking about markets and how the bulls were in action in yesterday's trading session. But I want to know it from you now that what should be the strategy for all the investors at this point in time. I mean, we have escalating geopolitical tensions also in the Middle East, but I think markets have digested the initial shock.
Thank you, and morning to all of you all, and thank you for having me on the show. So, this is not the first time that we have seen a situation like this in the Middle East, and the two names involved, Palestine and Israel, have been at loggerheads and similar situation many times in the history. Along with this, we have other issues also, be it with respect to Egypt, be it with respect to Iran, Syria. There are a lot of issues in the Middle East. And whenever things like this happen, the first casualty is, of course, the bump up in crude oil prices. Second one is a higher level on the precious commodities, that is gold and silver, and an impact on the global equity market as well. Unfortunately, what we don't know is how the situation is going to evolve and where all it is going to spread. But history is also witnessed that whenever these situations have cropped up and it has led to correction or downward move in the equity market, if you have gathered courage and if you have the confidence and commitment towards your equity market investments, then they have always delivered good returns. Somewhere, somehow, in some form, at some point of time, hope these issues will get resolved. But my sense is that unless and until it spreads to the other geographies or boundaries, I think it should possibly stay limited in terms of collateral damage. If other boundaries are also crossed over, then there may be a little bit of more escalation and collateral damage might increase. But like I mentioned, whenever things like this happen, we've seen the Lehman Brothers crisis, we've seen the invasion of Iraq on Kuwait and then US on Iraq. Other issues also we've seen. So I guess we should possibly get back to our own stride. I think locally, if I am concerned about is the five-state election and a big election next year.
Right. Good morning, Gaurang. And you put it fairly succinctly that the time of fear is also the time of buying. Uh, this particular expiry in October started on September of 29th. On the Nifty, you have a high for October, and the most recent low, which is 19,480, has been tested thrice as far as technical charts are concerned. Gaurang, there are two developments happening today. One is, of course, the earnings from TCS, which are expected to be very tepid and very weak. And the management has very practically also announced plans for a buyback. How do you see the overall environment in IT, and how would you sort of react to the earnings as far as TCS is concerned?
So let me answer your question on the buyback. I think this will be the fifth buyback. Correct me if I'm wrong, Shay.
Yes.
My memory serves me right. Fourth or fifth buyback. And every time a buyback has happened, as far as TCS is concerned, or other large caps on which we have fundamental coverage, I have always made my stance very clear that you have invested in that company from a long-term point of view. Buyback means maybe the company envisages the actual value of the share of that particular company at a higher level. That is why they come and buy back at higher level. And if you invested from a long term point of view, I don't think you should be in any kind of hurry to go and tender your shares in that buyback. Provided to subject to, of course, you bought it only from that short term bump up gain. But there again, the issue is proportionate number of shares will be bought back to the volume that has been tendered in the buyback scheme that has been rolled out. On the earnings front, Shell, we are going absolutely with uh, neutral to low expectation. Let me put it that way, as far as Indian IT universe is concerned. Not to forget, last year's backdrop of events have been an overhang. But the good part is post first quarter earnings this financial year, some of the IT companies have announced some decent big deals. Not that they will translate into earnings immediately, but at least there is a silver lining that you can see to the otherwise the entire negative overhang on the IT sector. So we remain positive on the IT sector, and we are also of that view that maybe there might be struggling times for maybe another quarter before we see any kind of improvement on earnings as far as Indian IT universe is concerned.
Yes, and the beauty of what Gaurang says is apparent from the fact that there are zero, actually negative expectations when it comes to TCS's second quarter earnings, which will be announced after markets close shop today. In fact, if you look at the past 3 quarters, the company hasn't come up with any kind of growth. So, any positivity that just might emanate from TCS might actually trigger a very, very strong upside on TCS. At the moment, the counter is, of course, at a fresh 52-week high, and the all-time high is not very far off, 36.28 in front of you, down about 10 rupees in Tuesday's trade. Gaurang, a good time as any to discuss a couple of high probabilities as far as stocks are concerned when it comes to long-term portfolios. Anything that catches your interest, which could be added at current levels in the form of an SIP on a monthly basis?
Surely, Shell. So, I guess, times like this are great opportunity to build up a portfolio from a long-term point of view. And there are a lot of themes and structural growth stories. I was listening into your commentary as far as defense sector was concerned, and my view, Shell, uh, on three sectors, just to give kind of outlook from next 3 to 5 years for your viewers and investors. Defense, power generation, power transmission and distribution, power equipments, and railways. Now, in these three sectors and two peripheral sectors, that is power transmission and distribution and power ancillary shell, my our view is that these are compounding growth stories for the next 3 to 5 years, because these sectors are going to walk the limelight with the order book, with the execution of order book, and great improvement in earnings. So this was just an overall view that in terms of themes and investment ideas, two of them from two different sectors. One is from infrastructure stroke engineering, a mid cap company called HG Infra and Engineering Limited. I think the stock is trading, last that I saw yesterday was 980 or 980 or 950 to 980. Approximately that was the level that I saw. This is a long-term growth story, great execution, great earning visibility. And there are possibilities of some of the mid caps turning into mid large caps and then eventually large caps. So we try to identify themes in the mid cap universe which have these kind of potentials. And the next one is, of course, from the metal pack, JSW Steel, a consistent outperformer, if you will, share, compared to the likes of the peers that are there in this particular sector. I think the last close was yesterday, somewhere close to about 770, 775. Both these names, of course, by default, are fundamentally long-term investment ideas. Start nibbling into the stock. You get an opportunity on a downward move on the market, have the capability and capacity to add to it on those down moves, and have at least 12 to 18 months plus kind of a time.
Uh, Wonderful exposition on how to make long-term portfolios. Let's start with JSW Steel. And Gaurang just put in practice what he mentioned in terms of buying the dip. If you look at the 10-year compounded annual growth rate, which JSW Steel has offered to its investors, it's 25.6% each year. It essentially means that in 3 years' time, if you divide 72 by 25, you'll get the rate at which a stock or an index doubles. So in less than 3 years, the money in JSW Steel has doubled over the last 10-year performance that you see. And it's one of the strongest steel franchisees in India at the moment, trading at a PE of about 34. If you look at some other details, it has earnings of about 5,644 crores over the last 12 months and a revenue of, hold your breath, 1,70,000 crore rupees. It's one of those nifty stocks that has done fantastically well. And the market cap is at the moment at a 1:1 kind of a ratio when it comes to JSW Steel, one of the fantastic steel franchisees that we have. What catches your interest as far as HG Infra is concerned, Gaurang?
I think the sheer capability and capacity that the company has exhibited, and over the last maybe about 6 to 12 months, if you see the performance on the earnings front, and of course the levels where the stock has been, and the opportunity. Of course, we are also absolutely aware about the code of conduct that will be put in place because of the state elections, which we have to see up until starting from next month up until the outcome in the month of December beginning. And of course, then of course you will have the big election in next year. You will have slow kind of order book run rate for this particular sector. But post that, I think there is going to be huge opportunity for not only HG Infra and Engineering share, but also for other infrastructure manufacturing companies. Just see the kind of development that we've seen over the last maybe about 3 to 5 years. you will listen into the commentary that the Honorable Minister, Mr. Nitin Gadkari, has to tell us about how he envisages the road infra to play out, and of course state-wise infrastructure creation and improving the existing one and modernizing the existing one. So purely on the order book, capability of execution, debt on balance sheet, and return on investment. I think if you have to put all these three in perspective, and this is one name that's not really spoken about, Shell. I think I rarely hear HG Infra
Absolutely.
name in terms of investment idea. So that also attracts us to this particular stock.
Absolutely. And as the name suggests, the company is into construction. It is a Jaipur based constructing giant which makes highways, constructs bridges, flyovers, and of course, other infrastructure. It is into civil contract projects. And you know what's interesting, Gorang? I am, of course, based out of New Delhi. If you just expand a radius of about 500 to 700 to 900 kilometers around Delhi, the kind of infrastructural uh, change or construction that is going on is amazing, whether it's airports, whether it's flyovers, whether it's highways. Tremendous amount of work is done, and that's visible in how HG Infra share price has matured over the last 5 years. If you look at the CAGR return for this one, that's also fairly substantial. It's in front of there about 33% each year over the last 5 years. So these are the two stocks that Gaurang has discussed in terms of sipping when you can add to your long-term portfolio. Tanya.
Absolutely, Shell. And I think I want to discuss some of the property developers names with Gorang, because they were among the top gainers in yesterday's trading session. Of course, on the back of strong Q2 quarter update, and in fact the Nifty reality index, that was also up over 4% to a 15-year high. Stocks like Prestige Estates, Soba, Godrej Properties, they were among the top gainers. So what are your thoughts, Mr. Shah, when it comes to these real estate stocks?
So, Tanya, our sense is that just to give you a feel about this particular sector, it was the most notorious or troublemaking kind of a sector before we had any kind of discipline come into this particular sector, and even after discipline in form of RERA, etc., other policies that have been changed by the central government, state government to enable infrastructure creation as far as real estate sector is concerned. And this is also, I think, one of the second or the third largest employment generator. And you need to have discipline whenever such a huge contribution comes through from one particular sector. Our advice, and let me say this also, Tanya, that despite this, huge sea of changes to bring in discipline is concerned, this sector still has that tag of high beta. That is notorious sector. Whenever markets are buoyant, you will see extremely outperformance, and whenever there is a correction, this will be the first one to take the knock on the chin. So you need to be a little bit careful. Having said that, our advice is to stick to niche and marquee names in this particular sector. So you have likes of, this is not on Godrej Properties, of course, we have a fundamental coverage. But other than this, there are other companies. This is not a recommendation. I'm just telling out the names. I'm just saying the names which are sound in terms of balance sheet, low debt, project execution run rate, etc. So other than Godrej Properties, Shobha Limited, Prestige Estates, Oberoi Realty, stick to these kind of marquee names.
Tanya, if you stick to quality when it comes to buying long-term equity multi-baggers, it's one of those practical things to do, but seldom is it practiced. While we welcome our very dear friend Milin Vasudev to its conversation, let me just pay attention to the wonderful opening that you see in initial trades. The Nifty well above 19,800, a 100-point jump when it comes to the initial enthusiasm that you see, the pent-up buying, the short covering, which will now be visible from 9:15 onwards. Let's just pay attention to how the stocks are puffing. First and foremost, HDFC Bank, the heaviest weighted counter on the Nifty, as also the Bank Nifty, 1527, up 0.2%. What is Reliance doing? 0.3% higher, 23.15. What is Earnings Boy doing? TCS 1.4% higher, 36.80. Remember, apart from the earnings, there'll be a lot of data mining happening on the fifth buyback, which the company will announce post market close today. How about Infosys? 0.3% higher, 1500. And Big Boy Reliance, it's now at 2308 at the moment, flat. How about the two other corporate banks? ICICI Bank, wow, 2.9% higher, 979.20. How about Axis Bank, 0.5% higher, 1018. So it's a very, very strong opening that's come into the markets. Immediately, let's focus on FNO, on stocks which are not index heavyweights. Okay, it's going to be a banking day, like I pointed out, Tanya. IDFC First Bank, 5% higher, 94.75. Let's look at Escorts, 1.1% higher, a fresh record high, 34.27. We have Hindalco and NMDC from the metal space rising 1.5% and 1% higher. We'll keep track of this rates, but it's 19,800 on the Nifty, where bulls are running to gain that momentum back. In the NSE 500, I see a couple of stocks which are on the high beta side doing pretty well. Jindal Stainless, 1.6% higher, 471. As also, let's take one more name, Tata Chemicals, 1.8% higher, 1035. We'll let these prices sort of settle down. Nifty at 19,778. If 800 is not close, you know which side the action is for the moment. Welcome, Milin Vasudev, Senior Technical Analyst at Arihant Capital Markets. Good morning, Milin. Your view on the Nifty, and how are you looking at sentiment on the Lal Street?
Yeah. Good morning, Shail. If you see, Nifty has stuck in a range of 19,200 and 300 was a strong demand zone over at the lower side, and there is a strong supply zone at 19,700 to 19,800 level. Now we are close to the upper band of the zone. That is, once Nifty starts trading above 19,800 levels for at least 1 hour, then you could see some kind of a short covering in the market, and you could see market heading towards 19,900, 19,980 levels. But yes, the sentiments are positive in Dalal Street, and looking at the current price action, which has closed well above the 50-day SMA, that gives a little bit confidence that market is likely to head higher and even test the recent high, or can make a new high also.
Okay, absolutely got that. And good morning, Mr. Vasudev. Tanya this side joining in the conversation. And let's now talk about, your top trading ideas for today. I mean, what are the technical bets that you are bullish on at this point in time?
Today, I'm going to recommend two stocks. Yesterday, in the latter half of the session, we saw good buying happening in Escort, which is currently trading at 33,993 yesterday's close, and with a stop loss of 3,300. This stock can achieve the target of 3,600, 3,700 in couple of weeks' time. The second stock is from the mid cap. This mid cap that is Nifty 500. That is by PT Engineering. Now, if you see PT Engineering in the latter half of the session saw good volume pickup, and price and volume action is very positive in this counter. Even the stock is outperforming the benchmark indices, and the momentum indicators are positively poised. This clearly shows that one can keep a stop loss of 320 on the higher side. You could this stock can test the levels of 410 and 440 in couple of days time.
Wonderful. So you get a second pat on the back as far as Escorts is concerned, and technically, of course, the chart looks super fabulous, a record high when it comes to prices, and it's been a classic outperformer when it comes to the annual picture. A 1-year return on Escorts stands at about 66%. It's the second best performing auto stock within the FNO space when it comes to price action. 3407. This is where it closed at, a fresh record high, and the delivery statistics are very, very heartening. 9x more on Tuesday compared with Wednesday. So a great pick when it comes to a technical view on Escorts. Milin, staying with you, how do you see momentum returning back to the PSU basket? We saw a 20% uptick on GMDC yesterday. It's, of course, a lignite based organization. It's a mining giant based out of Gujarat. How do you see that chart and a broad view on the PSU rally?
See, on if I can comment on GMDC, if you see GMDC is continuously maintaining a higher top, higher bottom formation. Now, again, it is outperforming the benchmark indices. You have seen that nearly on 3 weeks basis, the stock is continuously going high only. And in this year, if you see nearly 160% return is there on the stock, and still it is continuing its upside momentum. Now one can keep, as it is slightly extended, one can keep a stop loss of say 20-30 rupees. Currently it is trading at 398 levels. One can keep a stop loss of 376. On the higher side, you could see this stock testing the levels of 450 and 475 in couple of weeks time.
Right. The volume bar that you see on GMDC yesterday was somewhere like 3.5 crore shares traded, and this is the highest volume at least so far in 2023. A huge price and volume breakout happened on GMDC yesterday, and due caution is advised. Coming back to Pitti Engineering, Milin, what's the price that you mentioned, 450 or 650? Just a clarification that's needed.
It is 650. Keep a stop loss of my mistake. It is 650. Keep a stop loss of 620 and a target of say somewhere around say 710 to 740 levels. So
Fair
my
point.
mistake.
And no issues, sir. No issues. It happens to the best of us. So that's the refiled call as far as trade is concerned on Pitti Engineering. Any view, Milin, that you would have on any other auto stock apart from Escorts? And I will fail in duty in mentioning if I don't say the kind of love that we have for auto shares and anything on two-wheelers and four-wheelers when it comes to Milin and our friend Gorang and of course myself.
If you see two stocks which are clearly outperforming the auto sector, is one is TVS Motor and second is Escort. Even TVS Motor for current year, it has already run up by 44%, and now again you have seen a 10 days of consolidation in this stock, and again it is making a new high. So one can initiate a long at current level, keep a stop loss of say 50 rupees on the lower side, and on the upside you could test the levels of say somewhere around 1650 to 1675 going forward.
Okay, absolutely got that. And Mr. Vasudeva, if you could also, share your thoughts on Coal India. It's the top weekly gainer on Nifty, up around 6% as we speak. So, what are your thoughts on Coal India?
See, clearly, Coal India, if you see for last, now it is making a 4-year high on the yearly chart. And now yesterday also we have seen a good price volume action on this chart. And even the momentum indicators are positively poised. If you keep yesterday's low as a stop loss, it is slightly deeper. But then again, you could expect a move towards say somewhere around 320 to 320, 330 levels in couple of days time.
Okay, absolutely. And what about Bharti Airtel? If you could share your thoughts on that particular stock as well.
See, Bharti Airtel also for last 10 days, we saw good consolidation, and then again yesterday a price volume breakout on Bharti Airtel. Clearly, it is an outperformer, and continuously on 3 years, if you see the yearly chart, continuously 3 years the stock is making a higher high formation, which is good sign, and one can keep a stop loss of say somewhere around 920 on the lower side, and on the upside you could expect the levels of 1000 to 1020 in couple of days time.
Right. The Nifty settled at 77 points higher at 19,770, and you see a 200-point uptick in pre-open trades at 44,554 on the Nifty Bank. Let's get Gaurang into this conversation. Mr. Shah, your view on Bharti Airtel. Intense competition in the sector, but very, very strong duopoly, which has now emerged, reflecting pretty well on Bharti. How would you look at this particular stock in the medium to longer term?
So I think there was a concern a while back as far as the African operations are concerned, Shail, and that has seen a slight bit of improvement, and I guess that should possibly improve as we go forward from here on. In terms of the domestic business, well, undoubtedly second largest cellular service provider, and constantly gaining subscriber base thanks to the loss to Vodafone Idea. Bharti and Jio both tend to gain a lot. We have a fundamental coverage on Bharti Airtel. I think the current targets, based on the earnings that we've seen so far, should be around about 980 to 1030 or 1040. I'm not really sure. But if the earnings improve, then definitely these targets would get revised upwards.
And a quick view on Coal India, Gaurang. The prices that we see are the highest since 2018. So that makes it a 5-year high. If you would remember correctly, the stock was offered at about 225 rupees by the government of India somewhere in 2011. And the opening tick that day was 330 rupees, which is where we are after a gap of somewhere like 12 years. The entire world is talking about green energy, and here is Coal India at a fresh 5-year high.
So there are twins in this particular category in terms of absolute non-performance. One is of course Coal India, the other one is again a government company, NTPC. If you recollect, Shell, these two companies have been traditionally underperformers since the time the IPO was there, from the floor price to the move post IPO and again to the current date. So, as a disclosure, Coal India has actually overshot our targets on the fundamental side. And the positive thing that I see for Coal India over the last couple of quarters is that the volume of coal output has improved, and so has the quality of coal. Thanks to the number of washeries that they added, that we've seen this kind of improvement in quality. I wouldn't give out fresh buying call on Coal India at current level since it has overshot our targets. But if you invested at lower level, you can continue to hold on. We'll revisit the stock target price once the earnings unfold.
Okay, I'll interrupt you here, sir. The Nifty's opened 83 points higher, 19,774. Remember, it's a gap up, and this is fairly heartening for bulls because we are on T-1 weekly expiry today for Nifty. And of course, the Bank Nifty, which will have its weekly expiry today, it shot up 250 points, 44,612. The IT index is in the green, as also is the Nifty 500. Let's shift focus to index heavyweights. HDFC Bank, 0.5% higher, 1533. Let's look at Reliance, 0.3% higher, 2316. Let's look at Infosys, 0.5% higher, 1502. And TCS, flat at about 3635. TCS will announce its quarterly earnings post-market close today, as also details about its buyback. One good thing is that all 10 index heavyweights are in the green. ICICI Bank, 0.7% higher, 957. Axis Bank at the moment is trading 1.2% higher, 1024. So intense short covering happening. Now the Nifty has hit a century, 110 points higher, 19 798. The Bank Nifty up 284 points, 44,640. Before I go further, I'll just take a very, very quick view from Milene on what to do on the Nifty. Would you suggest a call of 19,800 on the long side for the month, for the week ended October 12th, Milene, or do we stay away?
Definitely, one can buy a call of 19,800 levels because the market has opened up with a gap and with a little bit stronger volumes also. Volumes are picking up at current levels. So one has to wait for some 15-20 minutes. After 9:30, they can buy a call of 19,800. I expect that this level can be removed and index may test the levels of 19,900 to 19,990 in 2 or 3 days times.
Fair point. Let's look at outperformance on FNO stocks. City Union Bank, we had talked this being a day for the banks, is about 7% higher, 137.90. Escorts taking it away. It's 6.5% higher. Remember, this was a call given by Milene just recently, 3407 as far as cash stocks are concerned. Birla Soft Coal India up 5 and 6% respectively. NMDC 4.5% higher. Let's shift focus to PSUs immediately. Let's see which is the top performing stock here. It's at the moment ITI running away 5% higher, 233 fresh record high. MMTC 4% higher, 60.7. Manganese ore 3% higher, 224. HUDCO 1.8% higher, 91.60. Let's look at the defense space. Remember, this is all super high beta, which is doing fantastically well. Today's the day for Midhani, 2.3% higher, 417. We have Hindustan Aeronautics, 1% higher, 1977. Let's look at the entire rail pack. These are the ones which are super high beta and doing fantastically well as on charts as well as volume. Okay, HBL Power, 1.5% higher, 290. IRFC, 1.3% higher, 76.75. Railtel, 213. RVNL in the green, 166. This is how the markets have opened, a fairly decent gap up of anywhere between 80 to 90 points on the Nifty and a gap up of 220 to 240 points on Nifty Bank, both of them accelerating towards the green. What catches your fancy, Milene? How about a review on escorts and then probably one more call before markets settle around 9:30 levels?
Escorts, if you see, it has opened up with a gap, yes, but some profit booking might come in the latter half of the session. On the higher side, yes, this stock can test as today's high is at 3440, and that is also somewhere it is showing sign of strength at present. Yes, at the levels of say 3460, 3470, some profit booking might creep in this stock. But yes, one can hold it for 2 or 3 trading sessions. This stock is likely to head towards say 3500 levels.
Right. Getting Gorang into the conversation. Gorang, very well, you had put out the fact that any dip during a war is an opportunity to buy. And of course, dar ke aage jeet hai. How would you react to today's opening? 110-point uptick on the Nifty, a 300-point uptick on Nifty Bank, and a 200-point uptick on Nifty IT.
So I'll just spin back. Last week we interacted, Shail, and I think it was 4th of October. It was a Wednesday, correct me if I'm wrong. And that was the day when we saw the recent lows of 19,350 or 60, and we were there before the markets opened. We were in conversation. And even at that day, I mentioned that, look, I mean, we've corrected from 20,200 to the current levels. Possibly, it's not going to be easy for the bears to hammer the markets down further below 19,300 or 19,200, because that was the lowest level for the entire month of August. And we managed to bounce back from those levels and make a new all-time high. We had that view last week. We had that view of course, even today, uh, despite the fact that we have a new situation in form of geopolitical tension between Palestine and Israel, don't know the spillover or which are the other countries which will jump into this particular chaos. But notwithstanding that, markets will test your courage, markets will test your patience, and markets are always high beta. You have to remember that. But if you can ride those hurdles or speed breakers and overcome those, negativities, and stay invested with patience in good companies, markets will always reward you. At least that is what my personal experience is since the time I've got uh, you know involved in equity market as a profession.
Yes, absolutely got that. When you are an investor, I think it's all about patience only. But I want to come to you, Mr. Vasudev, now, and let's discuss some of the banking stocks. As Shell rightly pointed out, that it's gonna be a banking day today. Let's talk about ICICI Bank and Union Bank, Mr. Vasudev, and let's take a quick technical check on these particular counters.
See, if you see ICICI Bank still, it has taken a support at the 150-day moving average line, and now it is having a resistance at say somewhere around uh, 959 to 964 levels. Now, currently, it is up by say somewhere around 1%. But yes, looking at the price action, this bounce back is likely to continue towards 964 levels. One can keep a stop loss of say somewhere around uh, it can first test the levels of 964 on the lower side. 930 is a good support. If it crosses 964, then yes, the next target would be 970 to 980 levels. And which was the
Okay, and what
second?
about
Yeah.
Okay, and what about City Union Bank?
So City Union Bank is showing sign of strength at present. It has opened up with a gap, but yes, again, it has got a strong resistance at somewhere around 140 levels. On the lower side, it has got good support at somewhere around 134 to 135. One can keep a stop loss of 133. If it manages to cross in today's trading session 140 levels, then you could expect this stock to test the levels of say 144 to 148 to an outer extent of 152 in couple of days time.
So that's how the markets are at the moment. 107-point uptick on 19,800. We're at 924. Of course, Milene, the old world technician that is, will wait for the first 15 minutes candle to form and buy at the high of that candle when it's vitiated and keep a stop loss of that candle's low. So we'll wait for another 5 minutes very patiently for Mr. Vasudev to comment on what to do on the Nifty. But at the moment, the sentiment is firmly in bull territory. Let's look at broader markets. As far as advanced decline ratios are concerned, 1660 stocks are in the green on the National Stock Exchange, just 191 in the red. All 19 indices that we track are in the green, and the top gaining index is the Nifty Small Cap 100 Index, up 1% at 12,882. It gives you one very clear indication as to how sentiment is and where pricing action is concentrated. Low ticket, high beta. Therefore, all rail stocks, all PSU stocks, all small banking stocks are in the green. As far as sectoral moves are concerned, the realty index is 0.5% higher. The Nifty mid cap is 0.8% higher. And the Nifty bank is, of course, now 0.7% higher. Very, very strong traction coming in. The advanced decline ratio on the Nifty 500 index is actually 10:1. 456 stocks in the green and 42 in the red. So that's how the broader markets are structured at the moment. Fairly strong traction coming in and very good advice coming in from Gaurang. When there is fear on the Lal Street, that is when you should open up your purse strings and buy quality which is dipping. Milene, coming to you, KPIT Technologies, taking it away, 1223. I believe this will be a fresh high.
Yes, KPIT technology is looking good on the charts, no doubt. And currently, you could expect nearly another 4 to 5% move from current levels. But yes, I would little bit be. Uh, I would wait for somewhere around say 1220 to be crossed and then enter into this stock, because clearly a consolidation base is being removed with good volumes. Now volumes are missing at present, but if it crosses yesterday's volume bar, then you could expect this stock to test the levels of 1230 to 1240 in today's trading session. One can keep a stop loss of 1290 at the lower side.
Okay, absolutely. And I think we should pull up Bank of Baroda also. Basically, the Reserve Bank of India has directed the bank to suspend any further onboarding of their customers onto the Bob World mobile application. And we are seeing, a downtick there. Okay, 2% downtick there on Bank of Baroda. So, Mr. Vasudev, coming to you first, what do the technical charts suggest for Bank of Baroda?
See, Bank of Baroda, clearly it is making a higher top, higher bottom formation. But yes, in today's news, it is coming down. Good support at, say, somewhere around 200 and 5 to 200 levels. One can buy near, say, somewhere around 200 levels, because there is a strong support at a 200 level. We could see some reversal from those levels. On the higher side, yes, the stock has got strong resistance at around 213 to 215 levels. Once that level is being crossed, you could expect this stock to test the levels of, say, 235 to 240 in couple of days' time.
Okay, absolutely. These are the levels to watch out for. Coming to you now, Mr. Shah, on Bank of Baroda only. So, do you think it is a temporary hiccup because of the news that has come in, or is there more pain ahead when it comes to Bank of Baroda?
Well, Tanya, to be very honest, I think the public sector banks have to do more in terms of safeguarding their IT environment and improving the workforce in terms of attitude. There has been significant improvement, of course, no doubt about it. But even in today's date, to be very honest with you, I don't have anything negative bias towards public sector banks. But I have an account with a public sector bank and I have an account with private sector banks. Whenever you enter a private sector banks, the atmosphere and the feel that you get, and whenever you enter a public sector bank and the kind of atmosphere and feel you get, you know, in a private sector bank, you have an atmosphere of welcoming, and in a public sector bank, you have a question mark on everybody's face as to why you entered the bank. What do you need over here? That's the stark difference. But there has been an improvement. When it comes to the news, as far as the BOB app is concerned, not only public sector bank, even private sector banks need to spend a lot to keep their IT environment and platform and services absolutely secured, so that customers like you and me don't feel the kind of scare or a kind of a cautious approach that one would have. uh, don't know much details about this particular view of RBI on the app, but I'm sure on putting a halt to onboarding new clients would definitely mean that their IT environment or platform or services has come under possibly some kind of a load, and handling is beyond the capability and capacity. Uh, Let me give a disclosure. We do have a fundamental coverage on Bank of Baroda. We will review our coverage on the earnings front as well.
Fair point. It's 9:31 and time to get Mr. Milind Vasudev to give us a call on the Nifty. So, Milind bhai, 19,800 is in front of you. And the low for today, let me just check the low for today as far as the bank Nifty is the Nifty is concerned on an intraday basis, is of course 19,761. How would you view the Nifty as of now? at days high 19,800, what would you do? A gap up, a gap up that has built up momentum, and a lot of short covering seen in the entire option chain.
Shall I had already told that if Nifty is going to cross 19,800 and if it stays for another 15 minutes, yes, it is going to go on the higher side. And currently, first 15 minutes, it is showing sign of strength. You can expect Nifty to head towards say somewhere around 19,900, 19,980 levels. So one can buy a call at current levels also, and you could gain much going forward.
Okay, so now what we'll do is we'll look at the 19,800 call for the weekly expiring ending 19th of October, which is at 128 rupees. Remember, if you've joined us over the last 2 or 3 trading sessions, we've recommended you taking a look at 19,500 call for the month ending October, for the week ending October 12th, which is now deeply into the money at 309, and the 19,600 call at 215, again deep into the money. So because the weekly expiry is tomorrow for Nifty, you will get another 7-8 days to look at 19,800 if you look at the October 19th call. That's how the market is, and exactly on cue given by Milleen, it's again added about 12-13 points from the time that we spoke. 19,815. Remember, this is a fresh October high as far as this particular expiry is concerned, and the Nifty is marching very, very substantially and with great strength towards an all-time high, which is most likely in this particular month. Let's look at other stocks, and I can't take my eyes away from TVS Motors. It's been a favorite for both Gaurang as well as Milleen. Milleen, you go first. It's the top gainer in the auto F&O space, 1.4% higher, 1553. What would you do?
Clearly, if you see, it is maintaining a height of higher bottom formation, and again we have seen a 7 to 8 days consolidation, and again a new high today. And going forward, I feel that yes, one can keep initiate a long over here with a stop loss of 15, say 1510 as a stop loss, and on the higher side you could expect 1620 to 1640 in a couple of days time.
Gaurang, your call on TVS Motors.
Well, undoubtedly, I think last week itself we spoke about two-wheelers, and you told me to identify one particular stock in the two-wheeler universe, and TVS Motors was the one that I had flagged off, despite of the fact that it being one of the most expensive stocks in terms of P for the likes of compared to the likes of Bajaj Auto and Hero MotoCorp. And I still hold that view. In terms of order of preference in the two-wheeler category, I think number one would be TVS Motors, followed by Bajaj Auto, followed by Hero MotoCorp, and of course, देश की शान और जान Eicher Motors because of Royal Enfield motorcycles.
Okay,
we seem to
yeah, please go
we
ahead.
don't seem to be. Yeah, Tanya, my sincere apologies for making a lady wait. But when it comes to auto stocks, it's no stopping Milleen, Gaurang, and me. Somehow, some way or the other, the conversation always veers around auto stocks, and Eicher Motors, TVS Motors are the two top ones when it comes to two-wheelers. And I was traveling on a particular highway yesterday. I saw a wonderful tractor which was so huge that I slowed down, and it was an air-conditioned vehicle, unbelievably beautiful and amazing to look at. So while Delhi does not allow tractors to be driven on a ring road and normal roads, but it just sort of created a flutter in my heart. Maybe someday in some farm I'll also own a tractor. Tanya.
Absolutely, Shail. We also hope the same for you. So, okay. First of all, thank you so much, Mr. Shah. I know you have a busy schedule, but thank you so much for your time and thanks for being, with us here on Business Today television. And now coming back to you, Mr. Vasudeo, there's one more stock that is in focus and that's buzzing, and we should pull up, Midhani on screen for our viewers. Fresh record high, and it's up 3% as we speak. What are your thoughts, and what do the technical charts suggest for this particular counter, Mr. Vasudeo?
Uh, I'm getting a perforated chart, so I will not be able to comment on this. There's some problem in my software.
No issues. At the moment, at 421, Midhani is the top performing defense counter. And let me share the volume picture with you. I'm sure you'll able to rustle out the chart. Midhani has somewhere like 3,51,000 shares traded in the first 20 odd minutes of trade, up about 3.5% at 422. That's how the picture is at the moment as far as defense counters are concerned. But one stock that Milene you've often discussed is Vedanta, global healthcare, 768. Any view that you would want to share on Vedanta?
The last time also I was there on the show, I had recommended this stock, and I still say that this stock has got good potential to go on the higher side. The stock is currently trading at say 764 levels, good support at 750 and 745 levels. On the higher side, it has got a resistance at 770. Once that level is being crossed, you could expect the levels of say 800 to 825 in couple of days time.
Okay, absolutely. Let's pull up Zomato for you and see the action there. It is the top high beta gainer. And, we have been talking about these new age tech companies, Mr. Vasudeo, and, Paytm and delivery. They were on fire yesterday. But what do the technical charts suggest on Zomato? It is up 1% as we speak. 107 is the level at this point in time.
See, currently it is trading at 107 levels, but if you see, it is making a higher high formation, but the volumes are not picking up at present. So I would say that those who are holding this stock can trail their stop loss, say, towards say somewhere around 104 levels or 102. On the higher side, it can test the levels of say somewhere around 112 to 116 in couple of days time.
Tanya, let's pay attention to Bank Nifty. It's, of course, it's weekly expiry on Wednesday. It's a beast that seems to have been unleashed, 0.7% higher, 313 in front of you, 44,674. Now firmly above the 100-day DMA, which was actually adding as a very, very strong resistance. Firstly, your technical view as far as Bank Nifty is concerned, Milene, and then we'll touch upon HDFC Bank. 44,668 for you.
See, initially it opened up with a gap, had a good volume. Now the R1 level is being crossed currently, and I expect that one should keep today's low as a stop loss, or and on the higher side, it is likely to test in today's trading session somewhere around 44,950 levels. So one can initiate a long at current levels, and the stop loss would be somewhere around say 450 levels. On the higher side, 44,930 and 950 could be achievable in today's trading session. So one should trade with positive bias in Bank Nifty.
So that's the view coming in on Nifty Bank. The other point I wanted to touch upon was HDFC Bank, Milene. It's the worst performing stock on the Bank Nifty when it comes to a 1 month basis. Would you care to share your expertise on what the medium term and the long term outlook on HDFC Bank is concerned when it comes to the technical charts?
See, on the technical charts, if you see, it is making a lower top, lower bottom formation. Again, it is trading well below the 200-day moving average line. Last time also, I was on the show. I was expecting 1500 to hold, but yes, it is holding this 1500 levels and on closing basis. But I don't expect a much dynamic move in HDFC Bank. It could pull back to the levels of 1559 to 1588 on the higher side. I would not recommend a buy at current levels because we have our principle that the stock has to outperform the benchmark indices. Currently, it is not outperforming the benchmark indices.
Okay, absolutely got that. That's the verdict coming in on HDFC Bank. Mr. Vasudeo, let's talk about some of the real estate back. Some of these counters were on fire yesterday, and some of them are doing pretty well in today's trading session. Also, look at Mahindra Lifespace, and then Phoenix and Prestige. We have Puravankara also, and the management will also join us to discuss about the Q2 business update. They posted, strong second quarter business updates. So I want to know it from you. Any topics that you have from real estate pack and your thoughts on these, buzzing stocks?
See, yesterday, if you see, there was a lot of buying happening in all this realty stocks, and we had earlier recommended Prestige, but now currently on the chart, I feel that Phoenix is looking good on the chart. Now there is a 5-week consolidation on the weekly chart, and today we have a gap up opening in this stock. One can initiate a long in this stock, which say somewhere around and keep a stop loss of say 1800 and 1870 on the lower side, and on the higher side initially the resistance is at 1940 levels. One that is been crossed, you could see the move toward say 1975 to 2000 level. So I'm liking Phoenix. You can take my recommendation also in this stock.
Okay, and what about Puravankara, Mr. Vasudeo? Because the company achieved highest ever sales value of 1600 odd crore, and that is up by almost 102, percent. So, what do the technical charts suggest for this counter?
This Puravankara is currently trading at what levels?
138.
128, right?
138, yeah. Sir.
138 levels, yeah. Yes. On the daily chart, clearly, Puravankara also is making higher top, higher bottom formation, but I feel that it is slightly extended. So yesterday also we had a very good session in Puravankara. One can initiate a long in the range of say 135 to 132 levels. Keep a stop loss of say somewhere around 126. On the higher side, the initial resistance is at 143 levels. One that level is being crossed, you could see Puravankara heading towards 150 and 157 levels.
Okay, absolutely. And also, Mr. Vasudeo, one of our viewers, he wants to know about PVR. So, can you share your technical check on PVR as well?
PVR. See, yes. PVR, if you see, currently it is having a correct. It is in a corrective mode, and now it is just trading near the 50-day moving average line. If he is holding this stock, keep a stop loss say somewhere around 1660 levels. On the higher side, initial resistance is somewhere around say 1733. If it manages to cross 1733 levels, then you could expect the move towards 1800 and 1850 levels.
Okay, so that is how the markets are as far as the first half an hour of trade are concerned. The Nifty holding on to its gains despite a gap up, now up about 120 at 19,810. It's the weekly expiry on Bank Nifty today. A triple century there, 303 points higher, 44,661. The IT index is 0.5% higher, and the broader NSE 500 index is up 128 points or 0.7% at 17,432. The broader momentum in the market favors the bulls. The advanced decline ratio when it comes to the broader NSE is 1735 shares versus just 202 that have shown a red tick. So very, very strong 8:1 kind of an advanced decline ratio in the broader markets. All 19 indices that we track are in the green, the top gaining index being the Nifty Realty Index at a fresh record high 612, up 1%. And this is as good a time as any to look at Purvankara Builders. This is the corporate part of our show. We are going to be joined by Mr. Abhishek Kapoor. He's the group CEO for Purvankara, one of the very well-known real estate companies moving out of Bangalore. Mr. Abhishek Kapoor, welcome, sir. And what a wonderful day to host you. There is an all-round green tick in nearly all good, fundamentally strong sectors when it comes to the real estate space. Broadly, how do you see this sector shaping up in top cities? And what would be your outlook on Purvankara for the next 2 or 3 quarters?
Good morning, and thank you for having me on the show. So, as a sector, if you look at this whole space, currently the demand that is there across the country is very, very consistent, and it's cutting across all housing, right from luxury to mid-income. Process is that all of this is end user driven. It's not investor driven, right? So because it is end user driven, the cycle seems to be going in a direction which is a very, very long term upcycle where end user demand has come back into the market. So that's as far as the market is concerned. Purvankara, of course, is going to take a larger and larger position in the marketplace. That's our goal. What we are doing is this year about 15 million square foot of launches, of which we have already about 7 million is what we will open, of which we have launched 4 million square foot. We are expecting in next 2 quarters to add more launches, all of these, which will come about. And therefore, what we expect is as we have grown 100% in the last 2 quarters, in the first half of the year, the second half of the year typically is better. So we are hopeful to continue the trend as far as the brand is concerned.
Fair point, Mr. Kapoor. If you could share with us the scenario when it comes to residential properties. One, what are the geographies that you are addressing when it comes to high-end real estate? And what are the new projects in the offing over the next 6 months? Which cities, which price targets, and how should I say, which income category are you looking at?
Look, as far as luxury is concerned, all markets that we are present in, we are currently present in 9 cities. So Bangalore, Hyderabad, Chennai, Kochi, Coimbatore, Mangalore, Mumbai, Pune, and Goa. As far as our business is concerned, really we are focusing on 5 cities, which is Bangalore, Hyderabad, Chennai, Mumbai, and Pune in terms of our expansion and growth plans. And all our launches which we are talking about this year are split between Purvankara, Provident, and Purvaland. Purvankara is about 7 million. Purvankara is about 3.5 million square foot. Purvaland is another 3.5 million, and Providence about 7 million square foot of the total launches that we're talking about. And these are largely in Bangalore, Chennai, Kochi, and Pune. So these are the markets that we are planning to launch in the rest of the year. Of course, with the business development activity picking up, we're expecting a lot more acquisitions and adding a lot more land to our book in the western region.
Okay, absolutely. Good morning, Abhishek. Tanya this side. And let's talk about, commercial real estate demand. What's the scenario there? Because I think people are now, working from home. They're actually preferring to work from home. So what is the demand situation there?
Look, I think that is clearly evolving. People are pretty much back in offices. And what we are seeing is the leasing activity pick up including the prices and the rentals. In fact, we're expecting Bangalore market to, for example, close hopefully anywhere between 13 to 15 million square foot this year, which is pretty much back to pre-COVID levels. And overall, across the country, I would like to believe that we would definitely cross 40 million square foot. So, in my view, the commercial demand is pretty much back because people are back in offices, and it's driven. Of course, there are certain sectors who don't really need, and they're working a lot more on hybrid. But largely, most of the demand in terms of the office space is pretty much back, and we expect that to continue.
Okay, absolutely. And let's talk about the price rise as well. I mean, how has been the price rise, and is there any further scope for further price hike? And, have the land prices gone up?
Look, of course, land prices have definitely gone up as everybody is in the acquisition mode. But and the sales are there, so replacement of inventory has to happen. As far as sales are concerned, the prices are consistent in terms of appreciation. It's not like a outlier where the prices have gone up very, very significantly. But I'm anticipating a high single digits price increase to continue on an average. Of course, on project to project basis, these prices would typically, from the launch to a completion, anywhere between 50 to 70% they go up. So those trends, of course, that gets consolidated, and then the market average. Those trends always continue because that's the real estate cycle, at launch to completion. So I think high single digits across the country on an average, I think should be a fairly easy appreciation.
Mr. Kapoor, I was just looking at how your operating margins have improved over the last 3 to 5 year period. At about 16.21, how do you see them moving over the next 2 or 3 years, given that raw material costs, whether it is cement or steel or associated costs of getting permissions to set up a real estate project are on the rise? How do you see your net and EBIT margin moving over the next 2 or 3 years?
Look, I think EBITDA margins will continue to be around 30% typically. Having said that, as we complete old projects, earlier sold projects, and then new launches happen, there is a timing mismatch in terms of what expenses you book in your because of the aggressive growth and expansion that we are looking at, including the new launches. Other than that, on a gross level, on a project level, we'll definitely be at 30% average. Provident would be somewhere between 27 to 32%, Puravankara between 30-35, and of course, Purva land will be in excess of 35%. So that trend will continue. The cost increase, typically gets taken care of by the price appreciation that is normal in the normal course of the project and typically gets passed on. So I don't see that as having any impact on the EBITDA margins. However, it's obviously important to be mindful and keep an eye on the cost and make sure that we keep our value engineering and the operations as tight as possible.
Abhishek ji, one of the biggest supporting macro trends that have helped not only Puravankara but the entire real estate sector is this pause in interest rates that we saw from the RBI from the month of April onwards. That sparked a huge rally, not only for stocks but for demand for quality housing, demand for luxury real estate. How does your industry and the broader top guns in the sector now look at this strategic pause that has happened in rates? Do you see them rising given what the global trend is and of course inflation too?
So, I think as an economy and as a country, it's more important to look at the interest rate scenario. We are in a growth phase at this point in time. I think the government and RBI are fairly aligned to ensure that the growth doesn't get compromised. And in that process, interest is not the only variable that needs to be tweaked. Of course, in case of inflationary pressure, there are many other actions that the government and RBI can take. For example, the last time that the meeting happened and they made some announcement on the liquidity front. So I think interest rate stability is very critical for the economy and the country. I believe that this will continue. Of course, unless there is a completely unexpected global event, which I'm hopeful that will not happen. I think we'll remain stable and the same range as the current interest rate. So, which will be very, very helpful for the economy going forward.
Okay, absolutely, Abhishek. And if you could also tell us about your fundraising plans, if there are any going forward. And also, I was looking at the Q2 business update that you just posted, and the company achieved highest ever sales value of 1600 crore rupees, and that was up around 102%. That is a big jump. So, what are the targets now for FY24? And if you could give us some guidance on H2 volumes as well.
Look, we don't give guidance as a principle, but typically what I can share with you is, as I mentioned earlier, new launches are expected, and typically the third and the fourth quarter is definitely better than the first and the second quarter. So we are quite hopeful that we will continue to perform on the basis the past track record. So we are quite excited about how this is unfolding, and this year is going to be is like a pivotal year for us, which is setting new benchmarks for us. And I like to believe that we'll continue to show this kind of performance in future.
And what about fundraising plans?
So fundraising, of course, we are constantly in talks for funds because there are a large number of acquisitions which are currently, in the play. So yes, there will be fundraising, and we will make the announcements as we go ahead, as we do the acquisitions.
Okay. Mr. Kapoor, at the moment, it seems to be a Goldilocks kind of a scenario for all real estate companies. Whatever you construct, you are able to sell. And whatever prices that you announce are lapped up by end users. Is there anything that keeps you awake at night?
What keeps me awake really, I think, is to ensure that actually, really the focus is there in the business. So what keeps me awake is what next year and year after. So I'm actually not in this year in my mind. I'm already living in the next year and the year after, right? So in that sense, that strategy and the piece that how it will unfold and what needs to be done today so that we are able to do what we want to do tomorrow and the day after is very, very important. So it helps to spend some time and with free mind space thinking about these things.
Mr. Kapoor, Indian spirituality tells us to live at the present moment and now. And business tells us to plan for the better and for the future. With that note, we'll bid you goodbye. Thank you so much for your time and on explaining where Puravankara as a group, as also as a company is headed. We wish you all the good luck. And we hope that prices remain stable as far as customers are concerned, but they keep on rising as far as real estate companies are concerned. Thank you.
Thank you so much.
Wonderful. So that brings us to a close for markets today as of now. The Nifty is on T-1 weekly expiry day, which is tomorrow, 19,810. 116 points higher. Remember, there was a gap up of about 75 points, and the Nifty, because of intense short covering, has gained further ground. This is the highest level that we've seen in the month of October as far as the FNO expiry is concerned. And a fresh high is also on the anvil when it comes to the Nifty. Coming to the Nifty Bank, 212 points higher on weekly expiry day, Wednesday, 44,572. It's a sea of green across the board. Fresh record highs coming in multiple stocks, and the high beta low ticket items in the railway, the PSU, as also across the board are showing nice green signs of ticks. The bulls are back on the Lal Street, Tanya.
Absolutely, Shail. Bulls were backed or worse one and they are in action today as well. And we should also remember that, and experts have been saying this, that India's growth story is intact, and we can actually see that as well. So on that wonderful note, thank you so much, gentlemen. Thank you, Shail, and thank you, Mr. Vasudeo, for being with us here on Business Today Television and sharing these wonderful insights with us. So with that, it's time for me and my team, to wrap up this edition of Market Today. But you don't have to go anywhere. You just have to stay tuned for all the latest market updates. So lots more coming up for you. Stay tuned, and many thanks for watching.
And to terrorists everywhere, that the United States stands with Israel. We will not ever fail to have their back. We'll make sure that they have the help their citizens need and they can continue to defend themselves. You know, the world's seen appalling images. Thousands of rockets in the space of hours